We're with Jack Dempsey of Celebration Jewelers by Dempsey and Baxter, and we're here to talk about investing and why precious metals could be a good investment for you to consider. And Jack, what are some things that maybe people haven't thought of when it comes to precious metals?
Well, I mean, precious metals are basically a way for people to take back control. They have other investments that rely on brokers in order to care for their accounts, and in a lot of cases, the idea of having precious metals will appeal to particularly older people because they can take back control without the yearly maintenance fee that comes with having to have someone else monitor your account and deal with the increases and the decreases and keep you on top of how your investments are doing. Once you buy precious metals, you basically take back control of your investment, and you're responsible for whether or not it rises or falls.
Now, some common questions people might have, because there's a lot of choices for people. So there's stocks, there's bonds, there's a multitude of things that people can invest their money in. What would you say are some of the advantages that people should consider when it comes to precious metals, specifically silver and gold?
Well, silver and gold specifically, I think most people, for the most part, will invest in precious metals in order to have something to preserve wealth for their children, for their families. Anything that you pass on as a physical asset once you reach the end stage of your life can be transferred to your children based on a stepped up value. So if you can avoid having to capitalize on the profit on your assets once you transfer those to your children, in a lot of cases any increase that you would normally have a taxable consequence would be expunged, and the new basis would be established going forward once it transfers to your heirs.
And when you look at precious metals versus other forms of investments, and we were talking about this off the air, but the value that they hold, you were saying something, and I'd want you to explain this to the audience about how they kind of keep up with inflation.
Well, over time, and if we date back to like the 1930s, when gold was $16 an ounce and silver was just a few dollars an ounce. What's happened since then is that the money supply has increased based on the increase in the population, and governments tend to overproduce currency in respect to the demand for that currency to cash paychecks and so forth on the weekend. So as time goes on, 1950s come along, and the average person's making $39 to $50 a week. Well, during that period of time, gold is $30 an ounce. What you've seen happen is that precious metals keep pace with the expansion in the currency, and in the last 5 years, we've managed to double the money supply. Everything that was produced from the time Benjamin Franklin was walking around until George Bush left office, we've more than doubled. And so once that currency hits the economy, everything, not just gold and silver, is going to tend to rise in terms of inflation. The only reason it hasn't to this point is the amount of expansion hasn't driven the price up dramatically. But gold and silver, at a $1,300 level for gold and $21 for silver, they've appreciated from a gold level of about $100 in the early 70s to where it's at $1,300 now. So they keep pace with the currency expansion on a worldwide level.
And the bottom line, too, is that everybody's circumstances are a little different. Everybody has a unique investment situation. And really, you're here, you have several investors, you have institutional investors, you have business investors. Really, you're here just to give people information and to assess where they're coming from, so they can actually come in and have a conversation with you and talk through what might work best for them.
Every day. And we do all day, every day, talk to everyone. This industry is not built on minimum contract obligations like the stock market is. You can buy as little as a mercury dime for a couple of bucks. We have people that regularly will come in and buy 1 ounce of silver a week, and over the years they've acquired fairly significant portfolios, just as if it was a savings plan, by spending $20 a week to buy silver. Precious metals is not designed to penalize people for dealing with smaller quantities. And so a lot of people have been able to realize a fairly substantial increase in their assets that as a portion of their investment portfolio made sense to them. And now, of course, we're having our day in the sun because the market has benefited anyone that had the foresight to move into metals
And what do you
20 years ago.
and what do you say to people that say, "Well, I don't get a dividend with metals"? What would you
Well, I
say?
mean, to say there's not a dividend in metals is akin to saying, well, my car doesn't produce chocolate syrup. There is a return on investment in precious metals. It does not pay a dividend, but in the 6,000-year history of precious metals, gold has never gone to zero. If you put a dollar bill in someone's right hand and you put silver in the left hand, even a child can tell you which ones seems like it's the better option going forward to hold. Currency only changes based on our ability to provide goods and services. And when there's so many people out of work, the logic from the rest of the world is that the currency is losing its value. So my focus would be to say that you should never put everything you have into any one asset class. Precious metals, from a standpoint of inflation, they are driven a little bit by fear, but we're seeing as much fear in the economy as we've seen in 20 or 30 years. Until interest rates rise, until the fear goes away, you're going to see people continue to try to take back control by buying precious metals. People are afraid, and it's undeniable. And the best economic minds in the world can't figure out a way to balance the budgets, not just here, but in China and France and Great Britain. So we're going to continue to see a demand for precious metals, particularly from a standpoint of they're right now approaching the cost to produce the metal coming out of the ground. And so if mines can't be profitable, they will shut down until the price is more beneficial to them. We're at that point right now where there's very little downside risk.
Okay, and is there anything, and thank you for your overview on all this stuff as people make their decisions as to what is best for them. Is there anything you wanted to add?
Well, I think going forward that everybody has to make a personal decision about what they want to do with their investments. There is no one investment that is going to pay huge dividends. Most of the big brokerage businesses are watching for bubbles like that, and they have a tendency to capitalize on the bubbles for the benefit of their investors. So just be very cautious going forward and consider that those things that rise over time are the things that you're probably going to have the best success with. Buy the austerity issues, things that people need day to day, that they reward themselves with, the small things. Precious metal certainly conforms to that because you can buy $20 worth of silver or gold. But people are going to continue to buy the Starbucks coffee or go to McDonald's or take in a movie. Those are probably fairly good investments. And avoid the things that are too speculative. That's about as much as I guess I'd have to say. It's not, we're all in this together, and it's about everyone trying to go forward and protect their retirement and protect their future for their children.
Well, Jack Dempsey of Celebration Jewelers by Dempsey and Baxter, thank you so much for your time in breaking down our options for precious metal investing and the overview you gave.
Well, thank you very much for talking to me.